If you could go back to the early days of fuel finance, what do you wish you had known or done differently?
I think that I started from creating content, creating my audience, developing my LinkedIn, Twitter, all that stuff earlier before building the company.
My guest today is Alyona Mysko. She's the CEO and co-founder of a startup called Fuel Finance. They're on a mission to make finance easy and sexy for the startup ecosystem. We talked all about building a great company, building a great team, raising better funds, and how they're planning to scale the company.
How customers love your product and what is your revenue and how many customers you have. So I think this much more important than how much money you raised and how many employees you have.
The moment people raise it out, there's a hiring spree out there. I think the early focus should be on selling as much as you can and then getting the feedback and then fixing the product.
But the most important is to sell. And the one lesson that I learned that sell first then build. So I think that's very basic rule, but very important because we always ask ourselves what minimum viable product we can build and sell it already, and then understand if it's if we have product market fit with that without investing too much money.
Hey Alyona, welcome to the show. How are you doing today?
Hey, nice to meet you, and thanks for inviting me. I'm doing great. How are you?
Awesome. Having a broken foot, but feeling like a time of my life. So yeah, that's how I am. Every single time there's anybody that I've ever had a privilege of hosting on the podcast, I ask them one particular question. And the reason why I ask them is because I believe some of the past, the stories, whatever has happened to us. What is the earliest context you have of your life? How you become the Alyona that we are hosting today? So what's your story?
That's a very good question, I should say. What the story is behind? I think that maybe the story even has started much, much more earlier because I was always interested in chess, in math. So it's why I think it was my passion all the time, as I remember myself. But on the other hand, I was pretty creative person. So I liked painting, playing saxophone, so different things. And I think maybe from my early age, something from school age or something like that. So I started to interest more in math, and I was thinking how to implement something from math in a more practical way, how I can use it in my life, in my career. And I started to interest in economics, first when I in microeconomics. And I think it was that was the point where how I have started all this long journey with finance. And yeah, I think so. After that, so I met, I think, many great professors already later who were mostly in corporate finance. And I think that they inspired me a lot because they were so passionate all the time about what they're doing, reading different books all the time, recommending and giving their practical advices because some of them were entrepreneurs and they shared just their personal stories of managing finance or managing real business. And I think that's maybe the point when everything has started. And already after that was Big Four, PwC, and being an auditor. And after that, trying to understand corporate finance from practical way more and more. So I think that's how everything has started.
So the very first question, and before I ask you the first question that I have in mind, I just want to share the goal that I have for this particular interview, for this particular podcast. So I want this to be somewhat of a master class for any first-time founder, second-time founder who are just starting out the business, more so a venture-backed business because they have this cool idea, literally don't know what's coming ahead of them. So that's the idea. So I'm going to ask you very basic questions, very first-time founder-ish question, very early stage. Okay. So my first question to you is, which is asked by a very close VC friend of mine, very happy to call him a friend. And he asked me this question back in the day. So for Fuel Finance, why you guys, why this problem, why the solution that you have built is a solution, and why now? So if you can start us with that.
I think why Fuel Finance is because I have passion to finance. So I don't know, we have this even motto inside our team that we want to make finance sexy. So I think that's our key goal. And the product that we built is just the way how we want to do that. And I think mostly we are focusing we have like this. I have huge background in finance, in managing finance, being fractional CFO and being full-time CFO. And I should say that the problem that I saw and that many actually founders, they are not financial literate. And I should say that because of that, they do many mistakes and it's very painful. And I believe that like just fixing this problem with financial management, they can do much better, and they can have better financial results, better growth, hire more people, and have less sleepless nights, and also like doing great job like with increasing world GDP. So that's like our huge mission, to help these companies avoid financial mistakes. And actually like that's a reason. And the product that we built, so the key goal, first of all, to build a product that will be pretty easy, not just for financial people, but also for non-financial people. So that I know that they want just one solution, one dashboard with everything. Everything is explained in a very easy way, and just, click several buttons and get this like clear understanding what is going on. So that's actually what we are building. And on the other hand, I believe why now is a great time, because actually we were expecting that like 2023 was the period of financial downturn, and we saw some part of that when valuation dropped down, but also I expect that this year can be even harder for many entrepreneurs. And we saw like this among our customers previous year, when they started to think about financial management, that they need to increase their runway, they need to work with their expenses, they need to go deep with their finance. And that's why I think now is a very good period of time to build this product, because it will be high demand for like great solutions in financial management that can like make easier life for all entrepreneurs.
All right, fair enough. Okay, so let's start from the very beginning. How much time did you guys spend on validating the idea, finding the product market fit, working with potential customers? And what exactly was the notorious aha moment for you guys? Like, when did you figure out like you guys are on to something pretty big?
I think that like our story, so we had started even like from just services in financial management, and I was also mentor in different accelerators. So I think I had like more than 3,000 students or something like that. And that's like how I figure out like what customers really needs, what entrepreneurs needs. And during the first year, so we started with different services, but after that we understood very quickly that all companies, they need like this first time setup of financial system. They all the time ask all small medium enterprises which is profitable. So it depends, and based on this all different cases, they can have their best practice tailored for them specific business model and specific financial solution. So when we understood that, so we started like with doing MVP with no code, just like, like having Google Sheets and trying to code things in Google Sheets. And when we started, so I remember how we had our first customer was this product. So my friend, another financial guy, made an intro with one startup. It was PetCube. They do pet cameras, and they needed like some solution for their financial management. So they were already like not a small startup, I think they were already at Series A, and they needed like some solution because they have hardware product, and it's very complicated because you need to track this daily unit economics, and many different factors actually can impact your final profit, your final runway, burn rate, everything. And we decided, this like one of the founders who was CEO at that period of time, so we decided we'll test our product. So we said, hey guys, we have this like Google Sheet system. We don't know how it works, but we think that it will work good for your company. So let's try it. And we started to work with them. And actually we implemented this system, which was like not ideal at all, but we connected all executive team members. All team actually were connected to outputs, to KPIs, to plan actual analysis, to unit economics on a daily basis. We connected like different sources to Google Sheet system. And I think in 5 months, they started to be profitable. It was like their goal also. And I think that the huge impact was like done by this system, that everyone had like clear understanding what is going on, how their decisions like impacts their financial results. And it was like full transparency in the team. And that's like how everything has started, because after that, Yaroslav, who was CEO and also one of co-founders in PetCube, he joined Fuel Finance as an advisor. And after that, later, he joined as a co-founder because he was so impressed and he said, hey guys, you need to build that like for all other companies. So it was like so huge headache for me and for all our team, like for long periods of time. And we finally fixed it. So that's like how everything has started. And yes, already like 2 years we're building this product together. So I think it's even more than 2 years.
Can you just walk us through like the very early days of the, I know you've already given some insight onto that, like, you know, you guys got the co-founder and stuff like that, but when you started out early on, who were the first 5 hires that you guys made? And what was the decision behind hiring those first 5 hires? And the reason why I ask you this question is because a lot of the first-time founders, I think, I don't know if that's right or not, but, you know, generally, people have this sort of an idea like, okay, if we got a product, we need to hire CFO, we need to hire a salesperson, an executive salesperson, we need to hire, I don't know, VP of product or something like that. So I want to understand from your perspective, because you guys have done that successfully, like what were your first 5 hires and what was the rationale behind hiring those people?
Yeah, I think that our first, so when we have started, we already had team members. So actually we already had, I think we had 5 or 6 team members. And we have developers, mostly Google Sheet developers. So it's like some specific way of developers, like type of developers. But we had 2 of them when we just have started. And also, I think I was responsible for sales and marketing. And we have some financial people in our team, but these financial people were not in like with a purpose to manage our finance. They were financial experts. So just like with collaboration with this like small team, we have several financial experts, we have several developers. We like combine the things together with like best practice and knowledge of financial people to implement it like in the system. So I think that were our first hirings. Actually, there is like no need to hire too much people because I think after fundraising, I saw that thing many times in many companies when you just raise your money and you feel like pretty comfortable when you see like this amount on your like banking account, you start to hire people very quickly. And you start like it's like even growing. I don't know like how it's like possible, but it's growing somehow very fast and faster than your lead generation, faster than your revenue. And I should say that maybe in some cases you start to think, oh my gosh, so I need to hire a specific person for this task. But I should say that's like I was very long period of time the person who was responsible for finance, for sales, for marketing. My co-founder was responsible for product development, like for product strategy. And I should say there is no need to hire like this high level people for the first steps, especially like I should say about C4. So you don't need C4 earlier than like you have maybe $20 million annual revenue. So maybe you need like financial manager or financial planning and analysis manager or just accountant at the first step. You don't need like this like full-time CFO person. Actually, like this high-level people, they're responsible for very complicated things. Like they are responsible for some strategies, risk mitigation, I don't know, understanding like and analyzing and building very complicated financial models. But there is like no need for all this stuff when you just start. I think that the most important like is to sell. And the one lesson that I learned that like sell first, then build. So I think that's like very basic rule, but very important because like we always ask ourselves what like minimum viable product we can build and sell it already and understand if it's like if we have product market fit with that without investing too much money like in development of that. Because if we can sell it like with very like with MVP and we can get very good feedback from customers and users who will use it. And after that, so we can use this feedback to build this product better because we can like thinking about many different features like, oh, let's do that. I think it's like all the time our like discussion with my co-founder because he's not the first time founder and I'm the first time founder. And all the time I'm thinking, oh, let's do that in this financial product. And all the time I want to build like, you know, like the best financial product that I can imagine. And all the time he says me like, Alyona, we should be focused on let's sell that and ask our customers if they need that. So I think it's actually like very good point. So maybe like sales team, like going back, I was responsible for sales, but I think that on the first period of time, founder like is the best person to sell. And maybe like I should say that, I don't know, I think it was like a great team that we had on the start. It was like more than enough like to build this product as this product. And after that, we already, I think the next person that we hired was, we started to hire more developers. We just hired actually product manager just several months ago. So before that, we were like both responsible for product development with my co-founder. And 1 year, maybe something like 1.5 years, we hired our head of sales. And just like 6 months ago, we hired marketing managers. So before that, we were like growing with our own efforts, with like not very many team members.
Yeah, no, that's a very good point that you raise actually, is do not hire people if you don't absolutely need it. And I've seen that like many, many, many times, especially in the CPG world and now also in like B2B SaaS world as well, because two of the world that I'm really accustomed to. A lot of the time what happens is like the moment people raise around, there's a hiring spree out there. So the focus, I think the early focus should be on, selling as much as you can, and then getting the feedback and then fixing the product so you can just go kind of like you can get on a better trajectory. I think that's what it should be.
I think that like it's maybe some strange way on the market how like companies, how other people see companies, and they think that if they raised money or if they have growth in number of team members, they are doing great. But actually, so I think there are like just two very important metrics. So like how customers love your product and what is your revenue and how many customers you have. So I think this like much more important than like how much money you raised and how many employees you have. So maybe it's just like some strange situation in the market that like that everyone wants to see some like other metrics.
Yeah, I had a mentor who taught me this thing that number of customers, money in the bank account, two of the most important metric that can supersede everything. Like literally everything. All right. So because you mentioned metrics, and you also touched the fundraising part a little bit, so I just want to pivot it towards that. So what were the core metrics or matrices that you guys were tracking from the beginning to evaluate the traction and engagement from the product standpoint?
So we have like we use our own product for ourselves, and we have our like SaaS dashboard because we have SaaS business model. But actually, what are important parts? So we always track revenue, month-over-month growth, year-over-year growth, number of customers, churn rate, gross margin. So gross margin is like also very important. So how are you doing? Like, is it's like the first level of profitability in your profit and loss statement. We also track all the time burn rate, runway. Also, we track like cash balance and changes in cash balance. Sometimes like per quarter and sometimes like on a monthly basis, I try to track and compare like dynamic of revenue growth with number of employees growth and with expenses growth. So what is faster? So in my case, like revenue should be always faster. And sometimes I also track revenue per employee dynamic in comparison with just revenue dynamics. So I think it's like several like additional metrics. But like we actually track a lot. So I should say that that's like, I think I named maybe like 10% of everything that we track. So we have like very data-driven company, and we collect all data from the first days because we use this data for building predictions, and we also use this data for experiments. So when we run different experiments, when we make different like assumptions, what we can get from these experiments, when we try to analyze like return on investment for these experiments and prioritize them. So we use all this data for previous periods. So it's just like on a high level. So what is important from what I start like my daily, weekly understanding where we are.
Okay, awesome. So one metric that you mentioned, and I read a book, I think, a few years ago when I was starting my own companies, which is called revenue per employee. And that's a very, very important metric to track. So for most of the listeners, because this is not a very widely spoken term, that is one. And two, because not a lot of content is being produced on financial education. So if you can please explain us again in a layman's word, what's the revenue per employee is and why that one term is pretty important.
Yeah, so like I think even like some of the founders from Stripe wrote Twitter posts about that. So what is it? So you have your annual revenue, for example, gross revenue. So or monthly revenue. And you can see that like this dynamic of growth, for example, of this monthly or annual revenue can be, I don't know, like month over month can be like 20% and you're doing great. But on the other hand, you also, like we discussed this question, that you always start to hire too many people. And that's like one of the points how you can understand if you're hiring like too many people in your team. Because, for example, you can compare this month over month revenue growth, and you can divide, like you can take like your monthly revenue and divide by number of employees that you have in your team. And it will be your like revenue per employee. And you can compare this revenue per employee month over month growth in comparison with your revenue growth. And for example, usually it can be like much lower because you hire too many people and efficiency. So it's like one of the signals that maybe efficiency of your business model is not okay. So you're growing with revenue, but you're growing very fast with like your hiring and expenses. And we know that like payroll is the most significant part in the companies in their like profit and loss statement. So that's one of the point. And actually, sometimes I also like, we are now doing our strategic session and we're doing retro for previous year. So I also started to compare not just like revenue per employee, but I started to compare like revenue and expenses per employee. It's also like interesting to compare the things and also to see like annual dynamics. So what is growing faster, like your expenses or your revenue? So there are like plenty of things, but like revenue per employee, like pretty easy. So just divide like monthly revenue by number of monthly employees that you have. So that's all. And you can see like how are you doing.
All right, great. I just want to, pivot a little bit towards specifically fundraising, because we talk a lot about venture-backed startups and exits and scales and things of growth and stuff like that. A few questions on top of that. Question number one is, how much did you guys raise in total? And what was the strategy behind choosing a specific investor? Because when we were doing some research, I think I did come across, what's the founder of the Bolt? I think he's one of the biggest investor in your multiple rounds. So yeah, just talk to us about, how much you guys raised in total and what was the exact strategy behind choosing one investor and not the other investor. So what you guys had in mind?
Yeah, so we raised 1 million. So it was our first $1 million. It was our first fundraising, and it was our seed fundraising. Before that, we were bootstrapping. And so that's actually, it was our very strong point when we entered fundraising, because we were profitable. And I should say that it was like the point that we wanted to raise money to invest in sales, marketing, and product development and growing faster than we had before. So that's why it was like very strong point. And we were in a position when we wanted like to have people who can bring value to us. And how we decided about this strategy. So actually, we understood that we want to have angel investors who have, first of all, a background of building companies before, maybe like the people who also built like B2B or just SaaS companies, because we have not just like Marcus from Bolt, we also have John from Sandbirds. They are building like B2B. And on the other hand, so it was just like we understood all the time after discussion and after calls with investors. So we had the strategy, so we had the list of investors. After that, I also did research just with LinkedIn, and I already shared the stories many times that we used also High Risk. It's like HR software. But you can just like search in LinkedIn for specific profiles. So we were looking for people with background in fintech, in B2B SaaS, and specific investors from VC companies, not just VC, but specific partners. And we did this like cold reach out to them also. So we had warm intros, and we also did this like cold reach out. And we are focusing. So I actually discovered every person, every partner, so what background he has, what companies he invested in. So like I'm trying to understand like if there will be value for us from this communication. And I should say that like maybe, like to be honest, maybe first calls. So I'm so smart now, but like when we just started our fundraising, I was very nervous because it was my first fundraising and I wanted like, like to be good for every investor. But like, I think after first 30 calls, I understood that it's like both sides partnership. And I understood like that during the call, I want to get value from these investors. And I started to analyze like what questions they ask me, if this question is valuable for me or not, because I think with good investors, like what I discovered, so with good investors, even after the first call, you think, oh my gosh, he asked me so many great questions. We should think about that in our company. And you like after these calls, you just go and like you already improve your company. So I think that's maybe my key insight about fundraising, that it's very important. And I should say that even after, when you have good communication with these investors and you see that they like very supportive, they bring you new customers, they help you with like mentors, advisors, with their recommendations, with their experience. So it's like very, very valuable.
Right. Awesome. So I think one thing that you mentioned that I would like to, emphasize on that is because you guys were like bootstrapping and you were not like running out of cash. So you were very strong financially and you had a very clear objective in mind. This is what we need to do. This is the amount that we're going to raise. This is the percentage we're going to give out. This is the type of investors we're gonna have on the board. It's just not like anybody who can write a $500,000 check. That you guys were like not looking for that. And I think that is one of the very key takeaways here is like look out for the right investors, look out for the right time, and then look out for the right amount of money that you need to raise, right?
Yeah, that's true. So actually, so there are like plenty of different points, because it was much easier to raise, because also my co-founder, he used to be involved in fundraising for 6 years in his previous company. And on the other hand, we also had very significant growth months over months. During the period when we raised, we were bootstrapping. So many different, like, I think many different points were in that period of time. And I think it was very good time because it was before valuation dropped down significantly. So it was like directly before, I think 1 month before we closed our fundraising, and already in the months after that, so valuation will drop down. So I think it was like many points, and it was like just the best time for that fundraising.
But also, on another note, I think even in this market, it's tougher now, but still raising a lot of money. It's the absurd type of ideas and companies that are not getting funded. So that is my takeaway on that. Next thing that I want to ask you is, tell us about the pitch deck that you guys had created. How much time did you invest on that? What was the entire pitching practice like? How many investors did you guys like in total meet? How did you guys pitch them? And yeah, just like the whole story of the pitch deck, like how did you guys create that? Did you seek out some third-party services for that? If you can please go down one level deeper and just tell us about the whole pitching process, because that's a very important thing.
Yeah. So I think you even can find on Business Insider our pitch deck. So we published it. It's open for everyone.
Oh, we were definitely gonna link that in the show notes so everybody can. Yeah.
So with this pitch deck, so everything has started, I think, 1 month before fundraising. So we did our first, first slides. So we understood what will be the structure. So, and after that, so we scheduled, I think, 30 calls with other founders, with our friends who already raised money, who have like bigger companies on like higher series. And we asked, so I had like 30-minute call with every founder, and I asked their feedback for this pitch deck, for my pitch, what can I do better. And we also have had several friends who are just, I think, professors from Berkeley and Stanford. So, and they also like gave feedback about how to pitch, how to do it better. So how to like understand what are your strong points, and actually how to build even like the speech. And actually it was like a huge help before, and this 1 month of preparation. And I think that every call that we had with like other founders, we did some changes in pitch deck. And after that, so after we did these changes, we also asked these founders to make intro with their investors. And after that, so I think we changed pitch deck all the time, because we always had updates with our revenue. We also, after every call with investor, we updated it all the time. So I think we updated it every week during the during fundraising. So we had some updates. But I think there is like no huge deal about pitch deck. I think it's even more important how you pitch, how are you confident with your idea, how you're passionate with your idea. And we also had like the list of specific questions, like what investor can ask about, like size of the market, what is your go-to-market strategy, how many customers you have, all numbers they can ask us, all questions about the product. So how we want to build this product, what we have now, what are our strong points. One of the investors like ask us also to prepare, for example, before and after. So feedback from our customers, what has changed in their like work with us. So what they see, how our product like works for them. So I think we were prepared with this list of questions, with this number of features when we trained with other founders, with different iterations of pitch deck. And even I saw like there are already plenty of different tools when you can train like your pitch, AI tools, and they can give you feedback. I think I tested even like one of them when we raced.
The tools that you're mentioning, do they actually work, or they're just like, yeah, just AI thing? A lot of them are like not working.
A lot of them not working, but actually, so I just asked like my friends, founders, to share their pitch decks. I was listening different pitchers on YouTube of other founders. So I tried like, to do this job like before fundraising, and actually we spent, I think, something like 1 month on this preparation.
Okay, great. One thing I want to ask you before I pivot to something else. You mentioned one thing that you guys were mentioning in the pitch deck was your go-to-market strategy. So what was your go-to-market strategy?
Actually, so we had already some of like first signals of good channels for us. So at that period of time, so I think everything has changed for the last year, but in that period of time, we understood that like financial workshops was our strategy, partnership with VC funds was our strategy. Already content creation in some way was also there. I think that's all for that period of time. So actually, like, yeah, and we did outbound also already, when we fundraising. This, I think, four were our core strategy. And some of these points actually still are. So some of these channels, but many things has changed. So I think that we just like saw that we did like more than maybe 50 experiments during previous year with different channels. So we are testing.
Yeah, that's very important. Okay, great. So, Alyona, one last question before I want to ask some of the audience questions that we have for you. How big the team is now? And the other question is, how have your leadership thought process has evolved? Leadership thought process has evolved with from doing everything to now hiring people and training them and delegating them, and then focusing more on the growth side. So yeah, how that has changed?
I think that changed a lot. So we have now 32 team members in 12 countries.
Oh,
and yeah, like I was also surprised. I just like saw this new information yesterday, and I was like, oh my gosh, 12 countries, 32 team members. And actually, so yeah, it was very long period of time, and I think as many founders responsible for many things. So I was wearing different hats, being like head of sales, being head of marketing, being like head of product. But after that, so previous year, I understood that like hire the best people is the best what I can do after fundraising. And I want to hire smarter people than me for specific roles. And I think that like when you stop like wear this hat of doing everything, so and you hire really great people, the next challenge to understand like what you can bring to these people. If they're already so great and they have good results with their like previous experience, so how can I manage them? So how can I help them to develop, to be better? So, and in that way, I think that like it's like maybe the main question for every CEO. You can grow just like when your team members are growing. And I started to think about this question, and I started to analyze like, okay, how I do one-on-ones. Like I do them on a weekly basis, but how I can do them better. So, and one point that I understood, just to ask more questions, not providing solutions, not providing your thoughts, just ask many, many questions. And it's it really helps in developing like people and works great. On the other hand, I understood that like having this high level win goals for the team and providing them that like, we are going that way. So we should be there in the end of the year. And after that, so every team member in our like executive team, they're preparing their thoughts, their strategy, how we should do with product, with sales, with marketing to be in that place in the end of the year. And we have this management system inside our team. So we have this dashboard with all high level goals, with all metrics, with all planned actual results on a monthly basis, where we track how we are doing. We also have now, we implemented, I think maybe some 4 months ago, we implemented a specific Notion page with all experiments that we do in our team and with the progress of these experiments, because I think that when you don't know, like when you're not sure about different things in products, in marketing, the best you can do is to run as many experiments that you can. And we are trying to track now, like how we fast with this experiment. So the more experiments we make, the more understanding we have about our customers, about lead generation, about sales, the faster we will be with final understanding what we should do and what we shouldn't do. So I think that like my job as a CEO now is to hire best people, create management system, create communication system, create one-on-one, be more culture for team members, create different frameworks for them. So something that will help them to think in different ways. So for example, create framework, how we choose priorities in the team. So, but to create this framework, you should do like research. You should like understand many different things to provide the best frameworks for these people. So on a high level. And I think this defining the strategy and how we can like achieve these goals, like, and find this, like points when people are not doing great and track this point, and also have this like high level of excellence in the team, be attentive to details. And I think that's like many things when CEO is started to be important. But I think it's always about the person who is behind executive team members. So they do all the job, and like CEO is a person who just like help them do their job better. So I think this is actually the role of CEO.
Very wisely put. I totally agree to that. Yona, what we do is we have a decent big of an audience. So very fortunate with everybody who's listening to the podcast or being on the newsletter or connected with us on LinkedIn. So before coming to the podcast, one of the things that we do is we send out this sort of a form like, hey, Alyona from Fuel Finance is coming tomorrow. Is there anything you want to ask? So there's all kind of questions. We only managed to pick like a few of them because you have already covered others. So I'm just going to ask you those questions. So the first one is, if you could go back to the early days of Fuel Finance, what do you wish you had known or done differently across all the areas like product, hiring, operations, marketing, management, sales, whatever?
I think that what I would like to do differently going back. So now we started like to create all this valuable content, and I started to develop like, it can be named like my personal brand, but actually on the final end, personal brand is always connected with a company. And going back, maybe I started to do this thing differently. So I started from creating content, creating my audience, developing my LinkedIn, Twitter, all that stuff earlier before building the company. I think it's like product development is a very complicated task, but like hacking lead generation on the US market is even more complicated in the first years, especially. And I think that like creating this personal brand actually helped a lot. So I think I did, maybe if I had this chance, so maybe I did this thing differently. So, and started much, much more earlier. Another thing I should say is that sometimes, so what I also understood, executive team is changing, and the people that you had at the earliest years of your company, they can be not a good fit on later stages. And maybe some of the decisions, they should be done faster. When I'm thinking about like previous periods of time, I thought about, oh my gosh, we like should hire this person much, much more earlier. And with this person, we should stop like much earlier to collaborate. So I think that's maybe something that I think about, like what I could do better in like previous years.
Great. Totally agree to all the points that you've made. So the second one is, what emerging trends you see in fintech entrepreneurship and startup innovation in like 2024, 2025, and how founders can take advantage of those trends.
I will not mention this trend about AI. So the trend not just in fintech, it's about like the trend overall. So it's pretty obvious. But I think that one of the trends that companies they will improve their profitability levels. And I think bootstrapping can be new type of unicorn. So, and I think that's being like understanding this trend that like founders definitely will want to manage better their finance. So it means that all different financial functions, and I see demand on different financial solutions, like starting from accounting solutions, like from bookkeeping, ending with expense systems like ramp, I don't know, like all that stuff, and with planning part, was even with payment automation of payments of all that things. So I think it will be growing during next periods of times. And I also see another point about building ecosystems and communities. So, and I think it will be something new and can be something new for the next years, because now I see that many companies they start to collaborate, for example, accounting companies with different FP&A solutions, or for example, CFOs start to cooperate with like different FP&A solutions, like different accounting companies. So it started to be like, seems like ecosystem. And I think it's also an interesting trend. And founders, like, I don't know, like if founders can build like new solutions in that part. So I think that it's still a problem in accounting and automation of accounting. So we are building so many great things, but accounting is doing manually, and it's still doing manually. And still QuickBooks is a huge problem. And I think maybe some solutions, automated solutions, AI solutions that can fix this problem of reconciliation of all this financial data in accounting, it can be like a great solution.
Okay, great. So thank you for answering that one. And the last one that we have on the list is, what's next for Fuel Finance and what can we expect from you in terms of personal branding?
The first one that you can expect that we will launch new bootstrap product, actually, that will be in two versions, in free version and it's like very cheap version, like of $39. And it will be like very great tool for early stage pre-seed companies. So that's the one thing that I will launch. And it will have educational part and tailored for specific business models. So that's actually the first one that everyone can expect. And the second one, so we will be focusing a lot on creating content, maybe creating a book or even creating community. So for financial people, we are now looking for that ways how we can build better financial literacy in the world. So I think that's something that definitely everyone can expect from us.
Awesome. Thank you so much again, Fiona. We do have one small ritual on the podcast. So what we do is we ask all our guests a question for our next guest without revealing who the next guest is going to be. So we got a question for you. Obviously going to take a question for the next guest. So the question that the last guest left for you is, knowing that 2023 was so turbulent and intense, what is your word for 2024? If you could describe 2024 in terms of venture capital, what's that one word would be?
I want to say AI, but it's already too much AI in this communication.
I think every single thing that you ask, there has to be a certain chance that AI is going to be the answer to that. Like anything you can ask these days.
I think it will be two words: AI and profitability. So I think both.
All right, Alyona, thank you so much for all the time, information, candor, and then lessons that you guys have learned. So thank you so much for sharing. I hope it's going to help someone who's just starting out in his career.
Thank you.
This is it from today's episode. I hope you enjoyed it. Thank you so much for watching and listening. All the resources and links that we have talked about, they're all in the description or in the show notes, depending upon which platform you're on. If you're listening on Apple Podcasts, please give us a review. Would appreciate it. If you're watching it on YouTube, please mention down in the comment, did you like it, did you not like it, what do you want us to improve, who do you want us to invite on the channel. If you enjoyed this episode, there are chances you're going to enjoy that episode as well. So we're going to link it down somewhere here. Do hit the subscribe button if you haven't done that already. And thank you so much for watching again, and I'll talk to you soon. See you in the next one. Peace.